Hello. So I'm doing an event this afternoon. I'm speaking to a group of creative people, and the organizer asked me to think about this question. Is there one habit that successful freelancers all have in common? And I thought, that's a really great thing to think about because, yes, I think there is. And so today on the podcast, that's what I want to talk to you about. What is this one key habit that gets you success and power in your life? It's this. It's consistent savings. Treating saving like a muscle, like exercise, like something that is a habit that you continue to do and that's part of your life, a regular part of your life. And I'm going to say, phrase this in a way that's a little bit of tough love, but rather than using perfectionism as an excuse. Okay, so I'll explain what that means. I've suffered from this myself, but there is a sort of false belief that I see in some people that I talk to where if they can't do the ideal thing, if they can't do the perfect thing, they won't do it at all. Right. And I think honestly, if you can't do the perfect thing, the better option is to do the next best thing. Right. For example, I would say that the most powerful habit you can have in terms of just creating financial safety for yourself is to put the maximum allowable contribution into your retirement account every single year. Right. For most of you, that's an IRA. There are actually other kinds of accounts that are even more powerful. These are things that I teach about in my program, Money Bootcamp. But an IRA is pretty universally available, whether you're self-employed or an employee. And so I use that as an example since it's so universal. So $7,000 is the 2025 maximum you can put into an IRA. And maybe this year has been a really rough year. I'm coming off a really rough year with my studio destroyed in Hurricane Helene and rebuilding and trying to give as much of my spare money to my neighbors as I can. And so, maybe putting the maximum 7,000 is not possible. But what I see, the sort of bad move I see happen a lot is somebody might say, well, I can't put in 7,000. So they put in nothing, right? Well, can you put in 1,000? Can you put in 1,500? Because what is objectively true is that a small, a possibly inadequate, a possibly too small safety net is still better than no safety net, no matter what, right? So I find that the habit itself of saving, even when that saving is incredibly modest, that habit is what sets people up over their lifetime because that habit is prioritizing it. Okay. So let me just kind of put some flesh on these bones today in the episode. So just to give myself as an example, because I'm really not pointing the finger at anybody else. I see this all over the place. It's pervasive and it's in me too, right? So for myself, I'm coming off a pretty rough year, right? We're coming up on the 1-year anniversary of Hurricane Helene. If you've been listening to this podcast, you probably know that my studio was destroyed in Hurricane Helene. I lost 20 years of work, like all of my art that I've made over 20 years is gone, right? So it's pretty rough. And also, Western North Carolina is really suffering. A lot of good friends of mine lost their livelihoods, lost their businesses. Some people lost more. Some people lost houses and people they love. So it's been a rough year for me, and I really reprioritized away from my own personal savings to just helping my community, right? Now, so instead of doing what I do normally in a good year, where I have my basic needs for my household and I put my money into my retirement accounts, which actually is such a priority that I consider it now at this point that I have the luxury, I consider it a basic. I took all my additional profit for the year and I gave it away. I gave it to, friends, neighbors, people who I have a direct personal relationship with who needed money, right, to rebuild their business because insurance was kind of screwing people over, to be totally frank, not paying out what it owed. People were really in dire need. And so that was a choice that I made to do with my money. And this year, because I have come to a point over 10 years of operating Sunlight Tax where I have enough income to basically to live without stress, live without fear, which I don't take for granted at all. I do put the maximum retirement contribution into my solo 401k every single year. And I have set that up. This is the thing that I teach people to do in my program. I have automated everything that I can about that to the best of my ability. So those contributions, I actually don't have to make any decision to be maxing out my retirement accounts every year. I have those withdrawals just automatically coming out of my bank account every month. So I have to stop it. If I take action, the action would be to stop it from happening. So that power of default is very strong. And what it means is basically, I'm going to fund it unless things go really, really wrong. And I would say things have gone really, really wrong, but even so, I did fully fund it. However, I didn't take any excess money and put any money into additional investments, which, in the last couple of years, because things have been a little easier than Hurricane Helene year, I have been able to do. Right. So I didn't do the ideal, the perfect thing for myself this year. What it might look like to kind of do the second best option if perfection is not available, if you don't have all the money you wish you did, and I don't have all the money I wish I did. I probably never will. Probably you never will either. But what that might look like is that you do the thing, you put some money into your safety net rather than none. Right. So what I'm trying to tease apart here is like, if you can't do the perfect thing, don't let that stop you from doing anything at all. Okay. So maybe you can't put $7,000 for the year into an IRA. Okay. A lot of people can't, right? But put it on your vision board, right? Put it on your list as a priority, because eventually, if it really is a priority and something you pay attention to and something you look at, when you do have, a windfall, when you make some unexpected sales, when something good happens, seeing that priority right there before you go spend the money on something else, like that is very helpful in getting you to actually get to some sense of financial security. So what I see is that when people just have this simple habit of saying, I'm going to do the very best that I can, ideally max out my IRA contribution for the year, they tend to actually make it happen, right? Even if some years it's a bad year and they might put $500, $1,000 in, right? It's actually that simple act of doing anything at all, which is exercising the muscle, right? Using that habit. And actually, I think that's the most powerful thing. When I was a full-time artist, when I didn't have Sunlight Tax 20 years ago, I was a full-time artist living off of my work and making a very meager income at that. Even then, I did prioritize saving for myself for a safety net because I was really worried. Money was so tight that I wanted to build up whatever savings I could, knowing that lean years would definitely come. And they did. They certainly did. So what I would do is I would put in as much as I could, which might be like almost nothing, like maybe $20 a month, right, towards my IRA. But if then I made a sale of 3 paintings, right, and so I had a little bit of cash and a windfall, what I would do is then with that windfall, I would put it all into my IRA until I maxed it out. Okay. So when I had very little cash and very unpredictable cash flow, that is how I managed to build up my savings in retirement accounts and in investments, even when I had almost no money, very, very, very little money to spare. Okay. So what I want you to know is that it really and truly is possible to set up savings for yourself, investments for yourself that grow. I say this as a person who has looked at the finances of thousands of creative people. Now, not every creative person, not every freelancer is poorly paid. Some people make good money, and I actually want that for all of us. But I have seen people with very, very modest income who prioritized putting money into investments every single year, specifically into IRAs. When you're a lower income person and you maximize your retirement savings each year and have that money invested, you get extra tax credits. You get the saver's credit, right? So there's actually a lot of boosting that comes to you through the tax code when this is your priority. It's free money that's on the table for you if you can build this habit into your life, which is why I am such an evangelist for it. So I have seen people invest small bits of money through these tax smarted accounts that are invested every single year over the course of their career. I have seen them get up into the millions, be able to give generously to their children, pay for college for their kids, and retire, without losing their lifestyle when they have very, very modest income. I have seen it. I have seen the evidence. And I'm coming back to you from the position of having seen so many people with modest incomes really actually do this, that I just want to tell you it's possible, because I do think there's some psychology there where if you just assume it's not possible, it's a little easier to just ignore it, to put your head in the sand and to just let it grow this sort of baseline anxiety and lack of security in your life. And so I just want you to understand that it really truly is possible. And believing it's not possible and believing that you are not going to do anything at all when it feels hard or when you don't have quite enough, I think that's a real mistake. I encourage you not to make that mistake. I also want to say that I do also see some like magical thinking, right, around the idea of investing, about setting aside money, putting it into tax advantaged accounts like an IRA and investing the money. There's some magical thinking that people often have, I think, as a way to make yourself feel better when you're not investing at all, when you're not doing this. That's like, oh, when I win the lottery, then I'll be okay. Then I'll do it, right? But I want to just tell you a true fact, which is that most lottery winners, this is true, look it up. The majority of people who win the lottery go broke within 7 years. So that's pretty interesting, right? And why is that? That is because people who win the lottery, unless they already had habits in place that were healthy, right? Good financial habits, they tend to just amplify whatever habit they already have. Well, what's the habit that more than half of them already had? It's overspending. It's spending more money than they actually have. And so when they get more money, they just do more of that. So they actually go bankrupt. All right. So what I'm saying to you is that it is possible, but looking at your financial habits, looking at those mindset traps you might be falling into, like thinking, oh, I can't do the perfect thing, so I'll do nothing, rather than saying, I'm not perfect. I'm never going to have as much money or time as I wish I did, but I will do better this year at saving than I did last year. This is one of the mantras I teach in my program, which is perfection is impossible. Aim for improvement. All right. That little one, that will help you. That will get you far in life. So it's the habit. It's the habit that gets you to financial security. It's not the windfall. Even people who get a windfall don't end up in financial security. They actually often end up, majority of time, they end up in a worse financial position than when they started, than when they won the lottery. So don't think the lottery, the white horse, is here to save you. It's the habits that will save you. All right, so I want to read you a letter. One of the pleasures of the work that I do is just that I work with these people who are so kind and so thoughtful. And of course, that's why I do it. This is who I want to see thrive in the world. And I got a letter back from a woman who was in my program a little while back. I'll read her words because they're more eloquent than mine. But I just want to share this letter with you because it touched my heart. And it really shows what is possible when you put your focus into this place. Okay, here's the letter. By the way, she wanted to remain anonymous, so I'm not going to say her name. But this is the letter, and it's unedited. Hi, Hannah. I don't know if you remember me, but I did your boot camp back in 2020. I think it was your second year ever doing it. I know you like to hear success stories and wins that come out of the teaching you do. I'm not yet feeling like I want to bear my finances to the world publicly just yet, but I do want to share it with you because I know you will be proud. And feel free to share it without my name if you want to. So here is my win. Since doing boot camp, I have not only made my bookkeeping way better and have a better understanding of things I can expense, but I also created a Roth IRA account and have made a Herculean effort to max out my IRA every year since 2020. I generally don't really even look at it. But I was doing some financial stuff yesterday and I looked at that account. It has grown from $0 to over $57,500 in roughly 5 years. I was curious how much of that exactly was my contributions and how much of it was growth/earnings. So I did a quick recap of what the max contributions were for each year. Thank you, Google. And added them up, which gets us to 38.5K. Once you factor in that I have not maxed out what I'm able to contribute this year yet, but I will do so, then it is absolutely true to say I have $20,000 more to my name than I would have had I not heard you speak at a lunchtime lecture at NYAA and joined your boot camp. That, of course, is just if I had been putting that money aside in a non-earning savings account, and I doubt I would have been saving so diligently either. I would have been saving some, but if we generously estimate that I had saved just half of that, you could possibly say I have almost $40,000 to my name that I wouldn't have if it were not for you. I am almost 40, and I know that is still a pretty minor retirement savings fund, but as a career artist who 5 years ago had $0 in retirement savings, I think it is pretty amazing. And it really is thanks to you. Much love, name withheld. So I just wanted to read that to you because that's a real person who wrote to me just a couple days ago. And I think it illustrates my point pretty well. I also hope that you can see that there is real love there. And she and I have been writing back and forth since this. I just feel so proud because she's a great representation of who I teach and who I'm trying to reach, which is like a really kind, ethical, wonderful person doing the work that she feels called to, which in this person's case is teaching art. She's doing it really well, but she has managed, because of my work, to set up a safety net for herself, including notice that she says she doesn't check in on this much. Now it's automatic, right? I don't know if you caught that part, but that's also beautiful because think about the anxiety that she does not feel now that she knows that this is growing in the background, right? She has a habit now. And to me, that's the magic. So if there's one thing that I want you to take away today from today's episode, it is that it's not the windfall that saves you, it's the habit. And the habit is in your control right at this moment, right now. You really can do it. You really can set up a safety net for yourself. I've seen the proof. In fact, I am the proof. If you missed the free class that I taught last week, I talk about this. I've had a million coaches tell me to take this part of my program out. It's too complicated to talk about and people aren't attracted to, they want to fix their taxes and that's why they join my program, but they don't want to hear me talk about compound interest and saving and tax advantaged accounts. But I refuse to give it up because what I really care about, even more than helping you have good systems to keep your taxes from being awful every year, what I care about even more is that you feel safe, is that you know that you are going to be okay. And money is how you feel that way. Okay. So in the free class that I offer periodically and that I did last week, I talk about compound interest and I actually show the math of how when you put the maximum contribution into just an IRA every single year, how it actually gets you multiple millions of dollars and you can live off the interest. That's literally why the IRS sets up that tax shelter. It's why you should use it. But it's also what makes retirement genuinely possible. Financial security, you not working anymore, really is genuinely possible if you just have this one habit in place. You max it out every year. Okay. So if you missed that class live, I do have a recording and you can feel free to watch it. It's a really good explainer. If you've never had somebody explain to you how compound interest works and why it is so powerful, how it really does grow your modest savings into something much bigger, this is the class. This class really shows you how to do that, okay? So if you're interested in just seeing that replay, you can go ahead and you have to register, but you can watch it pretty much instantaneously at go.sunlighttax.com/register, all right? I built my program, Money Bootcamp, to give you the hand-holding, but also just to show you that it's possible to do this, right? To show you the path and to be there as your cheerleader, somebody who really cares about you and cares about your security, and to just be that little voice in your ear that says, you can do this. That is really what I'm here to do. And thank you so much to that name withheld, delightful human who wrote me that letter this week. It just lights me up and makes me feel so happy that I want that kind of sense of security and pride to be there for all of you if you're listening. So again, if you want to see that class, the recording of the live class I did last week, you want to see that compound interest, I do also talk about my program in that class. And just a little tip, if you do watch it, you will see the best available offer that I give for my program, Money Bootcamp. If you do decide that you want to be a part of it, you want to join, you want to take that leap, you want to get that cheerleading, get those skills, I do offer a free one-on-one consultation when you join during that recording, right? So you can actually get that best deal that you missed last week. So to do that, you go to go.sunlighttax.com/register. Whether or not you watch the class and decide to join my program is really up to you. I'm not here to push that. I just want to let you know I did build this program because this is what I care about and these are the results I want to see. But to just leave you with a takeaway for today, I want you to remember that just letting perfection stop you from taking imperfect action, that's the mistake. You can do this, and I encourage you to do it even though you're human, even though you're imperfect. Do what you can and just aim for improvement rather than for perfection. And remember, it's the habit that builds your security, not the windfall. All right? And last, I just want you to know that I'm cheering for you. All right. Great to see you this week. I'll see you next time. Bye. Thank you for listening. If you like the show, please be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available for pre-order at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.